Hey guys, welcome back. I hope you had a really great day trading today. So lots of red today and volatility up to start the month of September. And I actually opened the month with a red day as well. And last week on Friday, SPY did close right near all-time highs. We just had a little bit of this gap left right here, and then directly above that we had all-time highs. So this morning at open, we gapped down and we gapped completely outside of the implied move. And if you've been following this channel for a while, every time we gap underneath the implied move, the next move that follows is a push in the direction of that gap. We end up squeezing in the direction of that gap for the rest of the day. So in the past 2 months, every time we've seen a gap completely over or under the implied move. So when it was over, we pushed up, and when it was under, we pushed down with no looking back. And that's what happened today in SPY. We opened with that gap down. We got underneath the bottom of the implied move, which is also where the 35 EMA was. And from there we dropped. We took it down to the 30-minute 200 moving average. And from there we dropped even further. We took it outside of the 30-day average volatility, which is a big move. That was 1.91% in itself, and we still took it lower. We took it down to the 50-day moving average, and right there you can see that long tail. Once we hit that 50-day moving average, we did bring it back up. And when we got to the bottom of the implied move, I actually wasn't planning on trading today, but when we made this entire move down to the bottom of the implied move, I said, let's put on some bull put spreads, and that's what I did, and they actually got blown out today. So I'm personally starting the month off red. Hopefully you guys had a better day. But so the 50-day moving average is where we did bounce today. And remember, I've been saying if bears are hiding anywhere, they're in this gap, and today they put up a new gap as well. So all-time highs are being blocked by another level of resistance, and we got slapped from that level pretty hard, all the way down to the 50-day moving average. SPY did close down 2.06%, and let's take a look at SPX. We opened here with that same gap down, completely outside of the implied move. So again, that did cause a squeeze on the day, and we dropped underneath the 30-minute 200 moving average right here, took it all the way down to the 30-day average volatility. And I trade SPX, so this is actually right about here is where I went in, hoping that we would swing back up, at least back into the box, and we did not. So we dropped down to the 50-day moving average. That is where we saw support on the day. So big green gap underneath, that is where we saw the buying on the day, and that was the consumer spending gap. So have that level on your chart, keep an eye on it, because it's a big green buy gap. That's exactly where we saw buying to bring us back up. Obviously still a massive down day, but hopefully you get my point. So SPX closed down 2.12%, SPY down 2.06%, VIX popped a massive 33.27%. We are back up at 20, just under 21 for volatility, super close to my preferred level here. And in both SPY and SPX, we did not close within the implied move. Not even close. We gapped completely under it and dropped. We didn't even close within the 30-day average volatility in either one. And taking it over to QQQ, we did open QQQ with a gap down as well, and I'm going to zoom in to show the levels that we gapped under, because last week we had the 50-day moving average, 474, and then the 35 EMA on the 30-minute time frame. And those three levels we chopped around the entire week. We didn't really get anywhere, and we did see the 30-minute 200 moving average as support. So all of those levels we gapped down, and so the first three levels, the 50-day moving average, 30-minute 35 EMA, and 474, and we just gapped right under it. We didn't quite gap underneath the bottom of the implied move at open, but immediately we dropped. So the bottom of the implied move was right here at 472, and that first candle right at open took us underneath that. And not only that, that 35 EMA was starting to follow us down. So we gapped down, and then we dropped, and then we took it down to the 1 hour 200 moving average. This is a level, if you've been following for the past 2 weeks, I've been mentioning this 1 hour 200 moving average, and that is because moving averages are a sign of momentum. And when a moving average is slow to turn, that means that we moved up too quickly, too fast, and when this doesn't turn quickly, it will almost always pull us down. I've been harping at that for the past couple weeks, and that's exactly what happened. We did bring it down to the 1 hour 200 moving average, and then we did have the 4 hour 200 moving average. I mentioned this last night, the downward momentum first right here, and then the upward momentum here. So that 4 hour 200 moving average did catch us, and then we came back up. We still didn't close within the 30-day average volatility, but we did see that 4 hour 200 moving average as support on the day. And we did fill this gap right here. So this was the consumer spending gap that we did have last month right after PCI and CPI. Did I say PCI? This was PPI and this was CPI. And then after that we had the consumer spending gap. We filled that today. So we are back at the levels of where we were after the inflation data came out last month. And then even before that, we're right around where the Amazon gap was too, where they guided the market lower before we saw this gamma squeeze. So we are back at 461, and we did close down in QQQ 3.04%. Really huge day. The implied move was just 0.86%. Then the 30-day average volatility was 2.61%. So we took a move even bigger than that. And this right here prior to today looked like it could possibly be a bull flag, because we did see support right here on the 30-minute 200 moving average. That was absolutely shut down today, and this pattern was disqualified. So 1 hour 200 moving average, remember that, guys. Keep an eye on downward momentum. It'll always pull us down. And you don't even have to know what's going on in the world. If you just see this technical downward momentum, it will bring us back down. So again, QQQ down 3.04%. VXN popped 22.29%. So we are at just under 24 for volatility in the Nasdaq. And we did not close even close to the implied move today. And then IWM had the biggest down move today. It was actually pretty similar to QQQ, and here we also did see a gap down. Let's take these arrows out right here, and we opened with a gap down. We got underneath the 35 EMA to start, and then we dropped underneath the implied move. And look at that, we took it all the way down to this downward momentum 1 hour 200 moving average. Truly, that is no joke when you see a somewhat bigger time frame moving average pointing down like that. You're gonna see it come down almost every single time. And the 30-minute 200 moving average was there as well, and the Jackson Hole gap right here. So we saw Jerome Powell at Jackson Hole, then we gapped up. This was 2 Fridays ago, and today we crashed through that. We took out that 1 hour 200 moving average, the 30-minute 200 moving average, and we took it just above the 50-day moving average. I'm not going to call that support because we didn't bounce off of it. We just kind of stopped. It was the end of the day, and we just happened to stop above the 50-day moving average. But that is an important level. Definitely know it's there going into tomorrow. Futures right now are down, and I don't have Russell futures, but ES and NQ are down about 0.5% each. So 50-day moving average in IWM, very likely we do test this tomorrow. IWM did close down 3.06%. RVX did close up 7.28%, so 27 for volatility in the Russell. Small caps are moving wildly, and here we also did not close within the implied move. And then the Dow Jones. This was our most bullish setup here. We had the 35 EMA right here, above the 30-minute 200 moving average, above the 1 hour, above the 2 hour. So we did head into the day as bullish as you can get with the moving averages, and we did gap down underneath the 35 EMA, and that 30-minute 200 moving average was support. I mentioned that almost word for word yesterday, that if we did drop, watch that 30-minute 200 moving average as support in the Dow, because we are still bullish here. And we did see a bounce that was also at the Jackson Hole gap. So right here we saw support last Thursday. This was after Nvidia earnings. Right here we found support on the Jackson Hole gap. Today that 30-minute 200 moving average was right there, and it also brought us up. The Dow is the only one that closed within the implied move, and this is the implied move for the week. Bottom was at 410, and we closed at 410.25. So it remains to be seen if this was a good place to buy for the week. I didn't see this intraday, but with the risky trades that I put on today, chances are I probably would have if I saw that. But DIA did close down 1.43%, and we did close within the implied move for the week in the Dow, and we're still bullish because this 35 EMA is still above the 30-minute 200 moving average, and all of the bigger time frame moving averages are in order. There's nothing underneath us pointing downwards to draw us down. So Dow is still the most bullish, and it's still bullish until this 35 EMA crosses underneath the 30-minute 200 moving average. And if that happens, let me see if we can see right here. So right here, we saw the 35 EMA cross under. Clearly, we became bearish pretty quickly. And then prior to that, let's see where we got the last cross up or cross down. Right here, as soon as we crossed up, we were bullish. And then the 30-minute 200 moving average was support. So it is important where the moving averages are, and they are a sign of momentum, as you were clearly able to see with that 1 hour time frame. So that is a recap of the first day of September, definitely stumbling into the month. And historically, September has lots of volatility. So if that is true this September, we are going to have a lot of fun. So let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you do get notified every time I post a new video. If you have any questions at all, please leave me a comment. This is really difficult stuff, and sometimes I do move really fast, and I got a ton of help when I was learning. So if there's something you don't understand, leave me a comment. I will get back to you. And if you want to support my channel financially, it does take about 6 hours a night for me to put these videos together. So if you did take a profitable trade based on something you learned here, then an easy way to give back is to hit that thank you button. Alright, so starting in SPY, tomorrow's implied move is between 546 and 558, and that is from options. The 30-day average volatility is about twice as wide, 541 to 562, and the implied move on Thursday's contract is between 545 and 559, and to the upside, the first level to look for is going to be the 30-minute 200 moving average. This is the first time that we've been underneath that level ever since we started that squeeze earlier in August, and the 35 EMA is directly above it, and the follow through we want to see to be truly bearish on this time frame is to see this 30-minute 200 moving average cross underneath the 30-minute 200 moving average. I think I said that wrong. The 35 EMA right here underneath the 30-minute 200 moving average. And when I switch over to SPX in just a second, you'll see that that 35 EMA is actually right here. So it does look like that is a very likely cross down in SPY as well. So 30-minute 200 moving average is the first level. Right above that, the 30-minute 35 EMA, and then the top of the implied move is at 558. The top of the implied move on Thursday's contract is 559, Because that 30-minute 200 moving average is right there at the top of both implied moves, that does make that 558, 559 spread look pretty attractive if we do bounce to start the day. Right now, ES futures are down 0.5%. I try not to look at futures too much because we've all seen futures be down a lot and then green by open. But if we do swing up, I would definitely be looking at this spread as an option. And then above that, we do have the down gap from today. So just under all-time highs is where we closed last Friday. Then we gapped down today, and that gap is at the top of the trading range for tomorrow. And then, of course, that other little gap that we left open on Friday, that is from where we made all-time highs back in July, and then the next day gap down. You can see we've been working at chipping into that gap for the past 10 days. And then right above that, we do have all-time highs. And then to the downside, we do have the 50-day moving average. We did bounce on that level today. And then just underneath that, the top of this gap, I believe this is consumer spending. The consumer spending gap right here, the top of that gap is at 548.82, so 549 right here, just under the 50-day moving average. Then we do have the 1 hour 200 moving average in the S&P 500 that is pointing up. It is, however, trading underneath the 50-day moving average. 50-day moving average and the 2 hour 200 moving average are the same level. So the 1 hour underneath the 2 hour, that is bearish. So that could keep us down or at least flat around here until those get straightened out. Bottom of the implied move for tomorrow sits right at the 1 hour 200 moving average at 546. 545 is the bottom on Thursday's contract, and then the bottom of that consumer spending gap is at 544. And then since volatility is high right now, let's just take one more level underneath, and that's the 4 hour 200 moving average. It is pretty far outside of our trading range, but we did see today a move completely outside of the trading range. So it's not likely, but it is possible. And so that is SPY and then SPX. The implied move over here for tomorrow is between 54.75 and 55.85, and that is from options. The 30-day average volatility is quite a bit wider, 52.40 to 56.40. And Thursday's contract, the implied move is 54.55 to 56.05. And to the upside, the first level to look for is going to be the 35 EMA. And this is what I was talking about right here, how the 30-minute 35 EMA is sitting right there on the 30-minute 200 moving average. That needs a follow through. We could bounce here. That 35 EMA turns pretty quickly. So if we do bounce over here, that would show support on this time frame. But in my opinion, the more likely scenario is this 35 EMA drops underneath the 30-minute 200 moving average, and then we would be looking at the 30-minute 200 moving average as resistance. When the 35 EMA is above the 30-minute 200 moving average, then it's support. But if it slides underneath, then we look to that 30-minute as resistance. Then we have the top of the implied move at 55.85, and 56.05 is the top on Thursday's contract. I like a $10 wide range in SPX, so 56.05, if I was to sell spreads up here, I would likely use 55.95 and 56.05 as my spread. And then above all of that, we do have the down gap from today. So down gap at open today to start the month. Above that, we do have the rest of that bear gap. I am going to zoom out here to where we made all-time highs right here in July. So we have been chipping into this bear gap right here. We left this part open and then we gapped down again today. So now, in reality, we have an even bigger bear gap because we have a little bit more than the down gap from all-time highs in July. So even though we chipped into this all the past 10 days here, we now have a bigger bear gap guarding all-time highs. So that is the upside. And then to the downside, 50-day moving average, we bounced on that today. And here you could see that also was paired with that gap. That's the consumer spending gap. The 1 hour 200 moving average is right at the bottom of the implied move. And you could see that even though they are pointing up, the 2 hour 200 moving average and the 1 hour 200 moving average, they are relatively flat. To be bullish with these two, we need the 1 hour to go above the 50-day moving average here, and we don't have that momentum right here. So there is a good possibility that we stay flat here or drop further. So bottom of the implied move for tomorrow, 54.75, 54.55 on Thursday's contract. Here again, I do like a $10 wide spread. So if I was to sell spreads, if we do drop, then I might look to 54.65, 54.55 instead of 54.75, 54.65. Hopefully that made sense. And then underneath that, we do have, let's look for one more level because volatility is high. We saw 33% rise in volatility to 20. So just know that the 4 hour 200 moving average is underneath us. And then we do have this other up gap. I don't have it written down here what this gap is from. It is there, and it is possible. Let me switch to SPY, see if I have it there. Okay, yeah, that was right before inflation data, PPI and CPI. So that is the inflation data gap from last month right here, is just underneath us with that 4 hour 200 moving average running through it. So consumer spending gap, if we do fill that gap, we've got the implied moves right here. And I would expect that we do see a technical bounce because we are oversold here, and a technical bounce here within this gap, in my opinion, is likely. But just because it's my opinion does not mean it needs to happen that way. So that is SPX, and then QQQ, the implied move for tomorrow is between 456 and 468, and that is from options. 30-day average volatility is quite a bit wider, 449 to 474 and 454 to 470 on Thursday's contract. And QQQ is a hot mess. To the upside, we do have that 1 hour 200 moving average that does have a downward momentum to it still. We did above that, the top of the implied move is at 468. And we also have the 35 EMA right here coming in from above the trading range. And always know where your 35 EMA is because the tendency is to come back to it. So right now, NQ futures are down 0.75%. That's pretty big. So I don't know if we're going to be swinging up into the green to meet up with that. But if we do have another big down day, then it is possible that we have a flat day to let that moving average catch up, or a little swing up to it. So 468, top of the implied move, 470, top of the implied move on Thursday's contract, and then above that we have this crazy resistance level, which is the 50-day moving average. And take note that that 50-day moving average did turn downwards today. So we have downward momentum on the 2 hour time frame as well. The 1 hour time frame is down, and they are trading bearishly in relation to each other. Then 474, I'll zoom out in just a second to show that level, and then the morning down gap from today. The top of that gap is 476, bottom of that gap is 473, and that 474 level, let's take this to the 1 hour time frame here, and right here, 474 was support, then we gapped underneath 474. When we swung back up, it was resistance, and then we did drop from there. Then when we did come back up, we did end up filling that gap above 474, but then started trading right back down to it, and we did lose it today. So 474 in the past few months has been a big level with a lot of action and a lot of volume, and likely a lot of options out in time that keep bringing it back to this level. So that is the upside, and it is messy. QQQ is absolutely no joke. I'm actually going to take out these arrows now because just to clean up the trading range, just because there is so much in this. And then to the downside, we have the 4-hour 200 moving average. We did bounce on that level today. So once we lost that downward momentum moving average, we caught support on the upward facing moving average right here. And if we lose that today, and again, NQ futures are down 0.75%. So measuring that out, if we do, that takes us well underneath the 4-hour 200 moving average. So that could be a resistance. Though honestly, because it's facing up, I would think that the 1 hour would be our first real resistance. If we break that 4-hour 200 moving average, 456 is the bottom of the implied move for tomorrow. And you just saw when I measured it out, we are in futures relatively close to that. And then underneath that, the implied move on Thursday's contract, 454. And then let's zoom it out really quickly here. We have an island bottom gap right here, and that consists of the rest of this Amazon down gap that we saw right here, right after Amazon earnings. That extends into right here. And then we have that up gap from right before that big squeeze. This up gap is from right before inflation data. So this is the PPI, CPI up gap. So Amazon down gap versus inflation up gap. And that is what we have at the bottom of the trading range. And then underneath all of that, we have the weekly 35 EMA. And the reason that level is important is because it has defined the uptrend. I'm going to switch over right now to the weekly time frame. 35 EMA is right here underneath us, and the 35 EMA on the weekly time frame, you could see we did drop underneath it here before bouncing back up. This was that area where we had VIX at 65. I think VXN was at 45. But before that, that has defined our uptrend since we bounced on the weekly 200 moving average, got back above the 35 EMA right here, and this is February of 2023. So about a year and a half of the 35 EMA acting as support. And then here we did break under it, but we pulled right back up. And you could see what happened back here in 2022, once we actually printed the first red candle, that 35 EMA became our resistance. So here and here and here on our way down to the 200-week moving average. And I'm not saying that's what's going to happen, but if we do print a red candle here, wouldn't that be wild if we made our way down to the 200-week moving average? It doesn't have to happen that way, but if we break this, it could actually be the end of this bull run. That's lasted about 18 months now. So something to think about. And let me get back to the 30-minute time frame here, see if there's anything else. So that 35 EMA that I just pointed out is right here. So QQQ, this is absolutely no joke, this trading range. All right, and then IWM. The implied move over here for tomorrow is between 210 and 217. That is from options. The 30-day average volatility is 208 to 218. And Thursday's implied move, 209 to 218. To the upside, we do have that downward facing 1 hour 200 moving average. Told you guys it was going to pull us down, and there it is. And if we get above that, and something I'm going to add really quickly here is, as a general rule of thumb, you don't want to go long at a downward facing moving average. We did see a gamma squeeze lately in the markets, and that didn't play out that way. In fact, we did see a rally with that downward facing moving average, but in general, you don't want to go long at a downward facing moving average. Above that, we have the 30-minute 200 moving average. Ignore this Jackson Hole gap because we did fill that today, so I just didn't adjust that yet. So we have the 1 hour 200 moving average, then the 30-minute 200 moving average, and then the 35 EMA is directly above us. And it's actually outside of the implied move. And look at how funny that trading range looks. Let's take the arrows out because way too crowded on this chart. I mean, look at that. Doesn't that make you miss the days of a completely bullish setup? Yeah, I don't miss it either. I actually love this. But 35 EMA is at the top of the implied move, which is at 217. 218 is the top on Thursday's contract. And above all of it, including the 30-day average volatility, we have this down gap from today. And I have to wonder why it says 218 here and 218 here. Okay, this one's actually going to be 219. All right, so top of the 30-day average volatility is 219. Above all of that is that down gap from today. And then to the downside, 50-day moving average is just underneath us. That is a really big level. And to be fair, even though we have the 1 hour 200 moving average pointing down, the 50-day, 1 hour, and 30-minute 200 moving average are trading in the proper order. So strangely enough, we are actually bullish here unless this 35 EMA crosses underneath this 30-minute 200 moving average. So right where they intersect right here might be a level to look for at 215 as resistance. And somehow I moved back up to the upside. So 50-day moving average is underneath us. And then underneath that, right near the bottom of the implied move, we have 211. And 211, I'm going to take it to the 5-year chart right here. That was a very long-term support right here. This is right after that COVID rally. We did find support around 211. Then when we broke it and came back up, 211 was resistance. So that took us back down to the 200-week moving average. And then we came back up to that 211 level right here this March. And then we just saw that rally where we got above it. And where is it right now? It's just underneath us right here. This red dashed line, that is 211. So bottom of the implied move here is at 210, 209 on Thursday's contract, 209 on Thursday's contract, and that takes us right into this island top gap, and that is right after we bounced on that 1 week 35 EMA. We came back up and we gapped up, and we actually gapped over this down gap from, this is where we saw 65 VIX right here, and just underneath that the 200-day moving average and the 200-week moving average. That was a huge technical bounce right here. I mean, it's even possible that we saw this entire squeeze because of that big level right here. You don't see that every day. You don't see that very often. 200-day moving average, 200-week moving average, and right where they crossed is right where we bounced. You just have to love technical analysis. But anyway, that gap is right underneath us from back there, and island bottom gaps can tend to be battle zones. So IWM, suddenly an extremely messy trading range. And DIA. The implied move for tomorrow is between 404 and 416, and that is from options. That is a fresh reading after close today, and we're keeping the implied move on the week from over the weekend, which is between 410 and 422. And then to the upside, we have the 35 EMA directly above us. And if we do get above that level, then the next level to look for is this down gap from today, which is right at the top of the implied move. And the top of the implied move is 416. Bottom of that gap is at 415. The 30-minute 200 moving average is right underneath us, as well as the Jackson Hole gap. You could see we did bounce right here. That was right before Nvidia. And again today we did see buying here. And 1 hour 200 moving average is underneath the implied move for tomorrow, and then the 50-day moving average underneath that. The moving average setup itself is still bullish unless this 30-minute 35 EMA crosses underneath the 30-minute 200 moving average. And the most bearish thing that I am seeing on this chart is we do have this island bottom gap. Island bottoms and island tops do tend to pull the price in. They do tend to fill. So if there's anything on here that's going to pull us down, it's going to be that. And the 50-day moving average is in that level as well. So there you have it, guys. everything you need to know in tomorrow's trading ranges to have an amazing day. Have fun tomorrow, trade safe, make sure you take profits when you're out.